Welcome to ForexTV.com's Forex Market Buzz. Today is Wednesday, January 2nd. I'm Caitlin Sisney. In early afternoon trade, euro dollar is trading at 147.37. Sterling dollar is trading at 198.15. Dollar yen is trading at 109.30. Taking a look at today's U.S. data releases, manufacturing slumped badly in December at an index of 47.7 for a 3.1-point decline from November and the lowest reading since early in the current expansion. The order readings, with odd exceptions for backlogs, are the weakest since 2003. New export orders are still above 50 at 52.5, but posted a stinging 6-point decline. Construction spending in November unexpectedly rebounded 0.1%, led by non-residential and public construction. The rise in November was above the market forecast for a 0.3% drop. Joining me today is Rhonda Staskow from Thomson Financial. Hello, Rhonda. Thanks for joining me today.
Good afternoon.
Rhonda, following today's manufacturing numbers, the dollar fell against the euro and yen. Should traders expect the dollar to continue to fall in afternoon trade and in the week ahead?
Well, yes, I think that they're just starting to see the beginning of bad news for the new year. One of the things that started the dollar-yen falling earlier today was, even before the release of the numbers, there were news of more layoffs, including National City, reports on CNBC of Citicorp firing more staff next week, and also later reports today of Merrill Lynch losing staff as well. That's raised fears that the slowdown in the U.S. economy will continue to increase into the new year, and of course raise recession fears, and priced in an interest rate cut down to 3.75% by March, according to the futures market. So these fears are weighing on the dollar.
Okay, as a weakening U.S. economy encouraged investors to reduce carry trades funded in Japan, the yen gained versus the 16 most actively traded currencies. Now, what is your outlook for the yen?
Well, one thing that's really important to remember at this time of year, and doesn't always occur, but often because of the approach of the fiscal year in Japan at the end of March, you see a lot of repatriation. And given the sort of losses they've seen on the yen crosses and the underlying assets, particularly because of the problems in the financial market, it's likely to increase pressure on Japanese investors to move their money from offshore, possibly back home, because the Japanese market actually ended negative for last year. So maybe they'll look for better opportunities in their own market for the coming year.
The pound fell to a record low against the euro on speculation the Bank of England will lower interest rates. Now, Rhonda, how do you expect to see sterling trade this afternoon?
Well, I do think sterling will remain under pressure. There's been a very large amount of sterling yen selling reported today, and I still think we can see sterling against the U.S. go down to 195, if not 192, because of these sort of concerns. So to that extent, that, of course, is still going to fuel this demand for euro sterling and probably push it higher, though I think psychologically 75 is going to be very strong resistance.
And finally, Rhonda, what do you expect from this afternoon's FOMC report?
Well, I do think the market is going to be focused on any signs of weakness that the Fed is noting in the economy, and particularly any signs that they will be looking to lower rates further. The thing is, in this sort of market, is that it's already old news, even if it was released, if the meeting was so close. So I think the market is looking ahead to data rather than old comments to see what they think the Fed will do next.
Great. Thanks for joining me, Rhonda.
Thank you.
That's all for today's edition of Forex Market Buzz. I'm Caitlin Sisney. Join us again later for PM Exchange right here on ForexTV.com.